Hi everyone and welcome back to your channel Management with Maris. Manage to prosper. Last session we started the third step in the entrepreneurial process, which was transferring from an idea to the entrepreneurial firm, and we started the first two tasks in that step, which were the ethical, legal and team or human aspects of entrepreneurial firms. Today we're going to finish this step, and all of these things come within our discussion of the second book of the channel, which is Entrepreneurship 2016. Well, for today we'll go deeply through the financial aspects of transferring from an idea to the new entrepreneurial firm. We'll discuss financial management along with financial viability and financing. Financial management, guys, it's the science and art of managing finance, managing money, managing assets. It includes how you will gain funds, how you will build your assets, which is financing. So that's why financial management is concerned with actually two pillars or two parts. First one is the assets and the second one is the liabilities and the stockholder equity. Our book Entrepreneurship 2016 gives four primary objectives for financial management, which are profitability, liquidity, which means the easiness of turning the assets into liquid cash or liquid money, efficiency and stability. Efficiency in terms of how well you utilize your assets to build funds, and stability in terms of how stable or how healthy your financial situation is. We talked before that all the aspects of financial management will be discussed in details in our channel when we take one of the future books of the channel, which is Managerial Finance 2012 book. Our book Entrepreneurship 2016 gives four primary steps for financial management. After we put our goals, objectives for financial management, guided by the four main or primary objectives of financial management that we discussed before, then comes the first step, which is preparing the historical financial statements. And the historical financial statements are impossible if you are new. So that's why you will start actually with the second step, which is forecasting, depending on how the industry works or a similar business or a similar firm. So preparing the historical financial statements, such as income statement, the balance sheet, and cash flow statement. Then after that, you build your forecasts about the revenues, about the costs, and things related to your finance and financial management. And then comes the pro-forma financial statements, which are the same financial statements, but that represent the future depending on your forecast. Finally comes continuous analyzing and checking the financial status, depending on the financial statements, historical and pro-forma, comparing them with the financial objectives of the company and of the industry norms and others. Right, about financing, there are actually two primary forms of financing. The first one is the personal financing, which is from the personal funds of the entrepreneur. This is usually the primary method of financing for new entrepreneurs. It includes also getting money from friends, from family members, but also bootstrapping. And bootstrapping means reducing costs to the maximum possible point. These are the methods of personal financing as per our book Entrepreneurship 2016. Then comes the external financing, which comes in the form of either getting debts or equity financing. Well, getting debts simply means you request an amount of money from a bank or whatever, and then you have to pay back that money, usually along with interests. So that is the biggest disadvantage of debt financing, is that you have to return the money in addition to the interests, but you remain in control of. And the equity financing, which is to get an amount of money from somebody in favor of becoming a shareholder with you. So management or control will be shared between you and the other person. So that is the disadvantage. But the advantage is that you will not be obliged to return the full amount of money back to that person. But that person, as long as he or she becomes a shareholder, he or she will be eligible and will have to get profits, usually in the form of dividends, by the end usually of each financial year. That was our session for today, ladies and gentlemen, about financial management, financing for entrepreneurs. By this by this session, we finished the third step of the entrepreneurial process, which is turning from an idea to the entrepreneurial firm. Next session, we will go to the last step in the entrepreneurial process, which is managing and developing the new firm. Thank you so much for watching us. Thank you so much for being with us. Please stay with us. Management with Maris, Manage to Prosper. Please support the channel so that we can continue our glorious mission. Subscribe to the channel on YouTube and activate the notifications bell there. Stay with us, support us, share the channel and all this electronic platforms at YouTube, our electronic website, manwim.com, email viewers@manwim.com, and our Facebook and Instagram pages. Stay with us every Thursday. Thank you so much for watching us. See you next Thursday, next session, and goodbye.